This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
I want to move on to the post-game chart deck. Now, we've got a special one for you this week, folks. You'll find the download link in your Research Roundup email. Of course, if you don't have a Research Roundup email, it means you're not registered yet. Just go to macrovoices.com, click the red button that says Looking for the Downloads, and we'll get you all signed up. The title of this week's chart deck is Talking Charts on Commodities and Crypto. So Patrick is going to be absolutely silent, and the charts are going to speak. Get ready. Here it comes.
All right, Eric. Well, I'm going to have to do all the talking. So let's jump to page 2, where I just want to have a quick look at the S&P 500 before we start talking crypto and commodities. And again, that 50-day moving average continues to be the support where a lot of traders continue to focus on. And right now, so far, the S&P has just looked like a typical market correction, very similar to what we have seen in February and March on numerous occasions, testing that zone. It'll be really interesting to see with us going into this big option expiration and where this gamma pin usually tends to prevail, whether or not some big volatility comes next week and whether that volatility is a breakout to the upside or whether or not that 50-day will be tested once again. And that's for sure something that's going to be on my mind going into next week. But on page 3, I wanted to talk the cryptos and start here with Bitcoin. And it was interesting because we both put up those charts last week and talked about what's going on in the price action. And the one thing that I was talking about was the fact that all of the crypto traders needed at this moment for momentum to stay. Like whether you have a strong belief in crypto or not, in order for prices to stay at these elevated levels, they need that positive emotional sentiment that drives that price action and keeps everyone interested. And Bitcoin was suffering from the fact that there was just a lack of real price progress, which usually weans interest in it. And the price action was deteriorating early or late last week. And then this week, suddenly, we obviously get some China headlines and the selling came in pretty hard. This chart now on Bitcoin is some serious technical damage. And overall, there's easily going to be a bounce on Bitcoin that could make it back to 42 or even 45,000. But there's a lot of technical repair work now that the bulls will have to do to turn this chart back up. And if this is anything like 2018 and the 2019 corrections, once this starts, this creates a prolonged period of consolidation. And it doesn't have to be some big fundamental shift, but really, if we don't see the bulls turn this around rapidly here very, very quickly, odds are that this is going to be a systematic distribution cycle that could last many months before Bitcoin attempts a bigger low.
Yeah, I agree with you, Patrick. I would just add that things happen a little faster in cryptocurrency than in the rest of the world. So I wouldn't be surprised if the norms that we usually apply for how long corrections typically take in other markets, I think regardless of whether it's a big down or a little down, I think how long it takes to play out in crypto is going to be shorter than in other markets. And we'll see what happens pretty quickly if that's right. I'm particularly interested to see if we get more weakness in Bitcoin, if that leads to further strength in gold, which so far it looks like at least some of the money coming out of the crypto space is going into the gold space. Is that the main thing driving the strength in gold and the weakness in Bitcoin? I have no idea.
Right. Well, I do want to point out that I was not referencing other types of charts, but rather, like, for instance, back in 2018, it was almost a 400-day correction that Bitcoin went through. And in 2019, the correction that Bitcoin had back then also lasted almost 260 days. And so these corrections have happened in crypto before. It's just prolonged consolidations. But one way or another, such a rapid drop certainly takes the wind out of the sails. And we're going to see whether or not they'll be able to recover it in short order. On page 4 and 5, I have those charts of Ethereum and Dogecoin. And And again, all of these cryptos, just it's obviously a devastating drop, a big blow to the bulls, wiping out 50+% in a very short period of time on these. And really, again, it would be very natural for us to see snapbacks. There's always reflexive retracements that occur after such devastating drops. But what will certainly be the thing to watch is that after we get a snapback rally, let's say Ethereum going to 3,000 plus, will it just roll over again and begin another distribution cycle, or will the bulls be able to just put together consecutive up periods and start to repair the chart? I don't want to jump to too many conclusions this early after such a drop, but it's a very sensitive moment in the price action to determine whether or not this chart has begun some sort of a more prolonged distribution cycle. With that said, I want to get to some commodity charts here, Eric, and let's start with that crude oil on page 6. I have the crude oil chart, and even like I was saying earlier, even earlier this week, it looked like crude was ready to make a fresh high. It was looking like it was turning up, and then obviously those headlines had us quickly begin a correction down towards $62, where we're trading now at the time of recording. We're testing right along that 50-day moving average. It's going to be a really interesting moment to see whether or not the bulls dig in and hold the line here, or whether this becomes a bigger turn in crude where we could see a correction down into the mid-50s. What's your take on this?
Well, Patrick, as you can see from the chart, we have a price channel drawn in, and the price has been moving since the middle of March very neatly in that nice, narrow $4 wide channel. And yesterday, it broke down out of that. Okay, does that mean we're going all the way back down to the recent lows around $57, or even lower than that to around $53, which is around where the next support layer ought to exist, or are we already done? I really have no idea here. My base case has been that channel was going to hold and take us all the way back up to a breakout to new all-time highs. It's not going that way. We're going to go down first before that happens. How far down? Frankly, I think it depends mostly on the sentiment reaction to headlines that are probably going to come out next week. We'll get some kind of announcement that says, essentially, the Iran nuclear deal is back on, the sanctions are going to be lifted. Iran's going to be able to sell its oil, not now, but in the future, after some future date when this all gets implemented. I expect headlines like that will probably shock us down to some final low shortly after those headlines come out next week. And that's probably a very buyable bottom. And I suspect that the market is going to shrug this all off, because I don't think this Iran thing is nearly as important as everybody else seems to. If I'm wrong about that, who knows? Maybe we're headed down to $53. I doubt it.
All right, well, let's move on to page 7, where I have the chart of gold. And I also kept that 50-day moving average on there just to highlight that, we've now spent almost 2 months consolidating above that 50-day moving average. But often that moving average will get tested on pullbacks. And one of the things I just want to highlight is that at any one time, we could easily have a $50, $60 pullback in the precious metals. And if this is in fact a new bull market, those should be all bought on dip. And I think that's the one thing that I'm actually waiting for to really confirm that we are right on this call, is that we want to see what a correction looks like and how quickly the buy on dip traders come in, whether it's very well supported and turns back up. And that's definitely the thing to watch in my mind.
Patrick, lumber futures have really, really just been probably the most parabolic chart of any market in this recovery. What's going on here? Did we get to, is that a dead cat bounce that we see beginning, or is it actually bottomed and maybe heading to a new high?
Yeah, we really saw that parabolic rise in lumber that we just saw us just head right up to those early May highs near 1,700. It triggered finally a correction, and a correction that saw us drop a solid $500 in literally a week. And we came right down to that 50-day moving average, and that has spurred at least a bullish reaction off that low. This is actually the really important moment in lumber lumber in my mind, because if lumber manages to muster up a rally back up to the highs, then it means that the bull phase is not over. But any failure here to make any progress north of 1,500 off of this bounce would give it a lot of price action characteristics similar to what Bitcoin had before it turned. And so it'll be really interesting to see how much gusto the bulls have here and whether they can really start getting it right back to the previous high, or whether or not this is going to start topping.
Patrick, this is going to be fascinating to watch play out because, frankly, I don't know where this is headed. I can make a strong argument for why I think there's a good chance the final high is not in yet, or the final top is not in. I think that what you see here is really an out-of-control supply chain situation. All of a sudden, it's impossible for builders to get some things. People are freaking out about pandemic risk and wanting to buy new houses and move out of the city and so forth, and you just literally can't buy materials. And if you can buy the materials, then the delivery supply chain is encumbered by COVID. So I as much as it looks like it's a parabolic top and surely the price can't go any higher than there, I think it probably can. We'll see what happens.
Oh, I agree. And it's too early to write off the bulls. I mean, when lumber got so ahead of itself, it was very natural for at some point us to enter some sort of profit-taking cycle, something that washed out those that were late to the party. But the jury's out. I think early next week's price action is going to be really important for me to make a higher conviction call on what's next for lumber. But I wanted to look on pages 9 and 10, where I have a couple of the other commodities, copper and corn. And what is interesting to me is that whether like lumber, the grains, and copper all seem to have put in their highs pretty much within a stone's throw of that inflation number that came out. And I thought it was really interesting that, we have this big report of inflation coming in super hot, and suddenly commodities all begin some degree of a correction since that moment. And one of the interesting things that I'm watching here is that all of them are just correcting what we would define as a typical mean reverting correction, something that is all above its moving averages, everything that typically in the past has been bought on dip. And it's not just lumber that we're watching. I think the entire commodity complex outside of gold is at a very sensitive moment to see whether or not these trends that have been in place since November continue. And that's 100% on my mind. When I'm looking on page 9 at that copper chart, well, I mean, it does look just like a correction. But the one thing that, I ask and think about is that I can't find anybody that has a bear argument on copper. This is probably one of the single most consensus trades to be bullish copper out there. And the thing is that when it's that consensus, that's usually where a trade is very crowded and it doesn't have that much further to go because simply everyone's already fully in. It'll be interesting to see whether that this very bullish sentiment toward these commodities does in fact mark some sort of an intermediate high versus what we can only confirm as short-term highs right now.
Well, Patrick, I certainly could not agree more that I do not know any bearish argument for copper other than it's way too crowded of a trade on the bullish side. That's the only reason, and it's a significant reason to be concerned. The thing is, the fundamental demand argument for copper is so incredibly strong. The bearish arguments that have kept me out of it are exactly what you said, which is, when we got it like $3 or so, and I said, boy, the prices, come up so much since the March low. You want to be buying copper around $2, not around $3. I'll wait for the dip. And we're at prices already where, as we come back down to, let's say we get back down to 4.40 or so. Hey, that's pretty darn close to your 50-day line. It's very tempting. And the idea that 4 spot something is a buy in copper for a medium to long-term trade was unthinkable just a few years ago, but I think that's part of this inflation, and I wouldn't be surprised if it's double that before this inflation is over. For those of you who don't want to be left out every step along the way, you can sign up for a free trial of Patrick's service, Big Picture Trading, where you can see chart decks like this from Patrick almost every single day. You'll find the information on page 12 of the chart deck or at bigpicturetrading.com.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the Internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at MacroVoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.